What is up, YouTube? My name is Adam and this is Broke Man Finance. I just got back from Vegas, and on my way out there, I really wish I could have got you this sooner, but on my way out there, I came across a company named Inuvo and started researching it. And I was kicking myself for not getting a video out to you sooner. I just wasn't in a position to do that because I had a feeling it was going to jump up a pretty good bit after reading what I read. But a lot of times with penny stocks exactly like this, they get a little bit of good news, they jump up a little bit, so it's all about timing. If you don't get in early enough, there's a good chance you'll be caught holding the bag. But I wanted to bring this to you so you can make a good decision on the penny stock because there's so much volatility. We see a hot penny stock coming out and it shoots up 200%, 300%, 400%, 500%, and then we start piling money in thinking it's going to keep on driving upwards, and it doesn't, and it crashes back down just as fast as it went up. So I wanted to hurry up and bring this video to you before the stock market opens up tomorrow morning so you can make as best a decision that you can. While I was researching the company, it was trading in the 65-cent range. Now it's jumped up to $1.74 at the time of this filming, and on the month, that brings them up over 300%. And make sure to stick around to the very end to find out exactly what I'm doing with the Inuvo. Am I going to buy all I can? Am I staying completely away from it, or am I just holding and watching? What made me do a double take at Inuvo, and well, let's be honest, most of us have never heard of Inuvo. Whenever I saw the company, I never even thought to look into it until I noticed Vanguard was buying a chunk of them. Vanguard had bought 1.8 million more shares and increased their position to 2.67 million. Now for Vanguard, they pee 1.8 million shares of any damn thing. That's not that big of a deal. But because they're Vanguard and they have some really brilliant people that work there, whenever I notice they're starting to pick up a penny stock or increasing their positions of anything over $1 million, it puts me on notice for the company and makes me a little bit curious to kind of dive in and see what they're seeing. Inuvo, ticker symbol INUV, is a technology company that develops and sells information technology solutions for marketing. These platforms predictively identify and message online audiences for any product or service across devices, channels, and formats, including video, mobile, connected TV, display, social, etc. These capabilities allow Inuvo's clients to engage with their customers and prospects in a manner that drives engagement from the first contact with the consumer. Inuvo has contractual relationships with clients who collectively manage over 50% of all U.S. digital advertising spend, like Google, Yahoo, Microsoft, etc. Inuvo also works with Walmart, Roku, NBC, Shopify, Home Depot, Apple TV, and the list is continuing to grow. But what are they doing for Walmart and these other major companies? How do they actually make money? Inuvo incorporates a proprietary form of artificial intelligence, or AI, branded the Intent Key. This patented sophisticated machine learning technology uses interactions with internet content as a source of information from which to predict consumer intent. Keyword in there is patented. They are figuring out what we are thinking and what we want to see by the manner in which we navigate the internet. They are putting in front of us what they believe we want to see. Inuvo earns revenue when consumers view or click on its clients' messages. Inuvo's business scales through account management activity with existing clients and by adding new clients through sales activity. Remember this, data is the most precious and valuable resource on earth today. It has surpassed gold and oil to claim the #1 spot. All of our data is incredibly valuable to these companies that are trying to sell us their goods or services. This is how companies are ran now. They are extremely data-driven. 97% of businesses use data to power their business opportunities. And 76% of businesses use data as an integral part of forming a business strategy. Now, if you're like me, you may be asking yourself, well, why aren't these giant companies, Walmart, Home Depot, Apple, especially somebody like Apple who's pretty tech mature, pretty tech savvy, I would imagine, why are they relying on Inuvo to do this other than doing it themselves? Well, from what I'm understanding, it's because Inuvo's patented technology is basically saving them 30% by doing the heavy lifting themselves. Inuvo is a micro cap company because they have a market cap of around 223 million. And if you're unfamiliar with what a micro cap company is, that is a company that has a cap between 50 to 300 million. I like the fact that they are establishing these contractual relationships with these mega companies. And hopefully they have a lot more room to grow, but it does kind of make me a little nervous that, well, they've already got these giant contracts, or at least contracts with these giant companies. Why aren't they a little more profitable? Another reason other than Vanguard's purchases for the recent increase in share price comes after the company announced a new direct offering of Inuvo stock. The first offering was announced the Thursday before last and just closed up on this past Tuesday. This saw the company sell 13,333,334 shares of its stock for 60 cents each to raise $8 million. Then the company announced another direct offering for their stock, and this had it selling 5,681,817 shares at $1.10 each to raise a total of $6.25 million. That direct offering closed on Friday. Inuvo expects to use these net proceeds from this offering for working capital and other general corporate purposes. Now time for some bad news. Inuvo has had a rough go at it the past 2 quarters. Now, in Inuvo's defense, they are attributing that decrease in revenue to the Roni, which I'm hearing that a lot lately, and I know it's a valid point, but I hope it doesn't continue to be a catch-all for a company to keep pushing out bad quarters, because something actually may be wrong fundamentally with their business strategy or business model. Anyway, that may be another video. But based off their last earnings report, they're around 30% down, almost 30% down on the year in revenue, and the past quarter saw over 30% decrease in revenue. In the last quarter, Inuvo delivered $9.2 million in revenue. $6.2 million of that came from the ValidClick platform they have, and $3 million came from that Intent Key platform I mentioned earlier. Sequentially, Inuvo grew 21.4%, driven by growth within both the Intent Key and ValidClick of 53.4% and 10.5% respectively. Now, they have had some growth, but they've had a lot of loss. And if you look over the last decade, the revenue is just, in terms of revenue, there's not really any growth there. They've had some good and bad quarters along the way, but if you look overall at Inuvo, the revenue growth over the past decade, it's been relatively flat. There hasn't been really a whole lot going on. Richard Howe, CEO of Inuvo, commented, "While Roni continues to impact our business, current trends suggest our recovery is underway. The Intent Key has grown year over year despite Roni, now up 16% through the first 9 months. ValidClick revenues in October are expected to be up 120% off their May lows." Mr. Howe added, "While Roni continues to make forecasting difficult and unpredictable, based on the revenue run rate coming out of October, we would expect sequential growth in the fourth quarter between 25% and 40%, which in turn should improve adjusted EBITDA heading into 2021. So at this point, I'm just watching. It's very interesting, and could it, for all you bulls out there on Inuvo, could they continue to push up? Sure. Now, if I would have been in this, if I'd have been looking at this a few weeks ago at 65 cents, and as soon as I see Vanguard and some of these other big players starting to buy, then yes, I'd have jumped on board, because I would have known that there was going to be there would have been a jump up in share price when that news came out, even if it's just inflated with hype. But the fact that they got some of the biggest clients in the world, Walmart, Home Depot, Apple, and they're still not really profitable, makes me a little bit worried. Who else are you going to need? Do you need everybody to start making money? This thing could easily fall back down a lot cheaper than what it is now. So if I decided to get in at some point, then I would certainly probably wait for another dip. I probably wouldn't get in. I won't get in right now. I would like to see several earnings reports that shows them going into a profitable direction, because right now that revenue growth, it just isn't there. So right now, and I'm just a hold. I'm just going to watch from the sidelines on this one. But for all you Inuvo bulls, by all means, go nuts on it, and especially if this is within your circle of competence, meaning if you really know the ins and outs of this marketing style, the business, or you really know these platforms well and you're super optimistic on it, and you feel like the growth is imminent and then by all means, buy all you can. But for me, it's just too risky of a stock. I feel like if I bought it now, I would get stuck holding the bag. But remember that risk and that decision is completely up to you. It could shoot up to $20 tomorrow. We will see. I highly doubt it, but you never know. I'm no financial advisor. I'm just a guy on YouTube. But other than that, let me know what you think in the comment section below. I'd love to hear your thoughts on it. And as always, I hope your stocks stay green. I hope you stay safe. And I hope everyone out there takes care.